we're here today with Simon Wajcenberg, who's CEO K1t Capital. I really invited you in today as a contrast to the traditional forms of investing that most people will know, the pension fund managers, stockbrokers. What's K1t Capital all about?
So we are a systematic quant-based hedge fund asset manager. So we have a Cayman Island-based hedge fund, and we manage the assets in that fund. But we are all about pure quant analysis.
So this is technical. I mean, that's the thing. I mean, probably the average person on the street, you know, quant. I mean, that's like Mary Quant. I mean, where are we there? what does that mean?
It means that it's pure technical analysis. There's no fundamental analysis with our investment strategy. And I thought today what I do is tell you a little bit about our long-term view of the market and give you a bit of a description of our investment strategy, and then describe how the retail investor or the average investor might use some of these investment strategies in the current market environment, which is quite interesting at the moment.
Right. Okay. Well, we had a peak. Obviously, we've had a peak. You know, we had a great bull run, especially referring to the U.S. markets. Great bull run going into from basically the dip in January 2014 to a peak in September. Caught most people. I would have thought most people on the hop. Most people sort of said that's it. 2014 is a year of doom. It's going down from January the 1st, and you know it's all over. A 9-month delay on that at least so far. So what's your view, and how have you? I mean, maybe. Probably what's more important is how you derived your view. Okay,
so I think first of all we feel that the S&P 500 peaked on the 19th of September this year and will now continue its decline for months, if not years. And we did actually describe that recently. We tweeted that on our Twitter page, and we were on Tip TV recently and described that peak. However, we do feel that there are buying opportunities, and we think that this is the case in several bombed out UK stocks. You know, we trade the US markets mainly. However, I know that your viewers might be more interested in the UK market, so we've done some analysis on UK stocks. So two stocks that we really like in the UK are ASOS and Tesco. Both these stocks have had a beating in the last year, and are trading at levels that none of us could have predicted a few years ago.
Presumably you like Tesco more than Warren Buffett does now.
Most certainly, but I think this is the interesting point. You know, going back to we're pure technical analysts or quant analysts, and we use an algorithm for our trading, and therefore we're actually not interested in fundamental analysis at all. So Tesco and ASOS have both had their issues on a fundamental basis. But one of the pleasures of algo trading is that we never use fundamentals to justify the trading decisions. So you might say this is reckless, you know, but we'd argue that allowing fundamental analysis of stocks to influence your decision will mean that the greatest opportunities are missed. So what do I mean by that? So our algo looks at the current price in relation to all previous prices, so years of price data. It's absolutely masses of data that we're analysing in a very short space of time, and that's simply something that a human just can't do. Humans will generally make the mistake of looking at just the most recent price action and extrapolating it, i.e. they're basically assuming it will continue forever. And what our system is what's called mean reverting, i.e. it's contrarian, and that's significant as well when you're looking at human interaction. So because we're contrarian or counter to trend, it will always feel like it's the wrong thing to do, because the crowd or the herd will always want to do what feels right. And we never get the comfort of being with the herd. So with each of our trades there is a period of anxiety before it is proved right. The reason we use a systematic or algorithmic approach is that it's just too unpleasant for an individual to make all these contrarian trades. And what investors...
So actually acknowledging an emotional, sort of like a blind spot that we have in terms of, that makes any sense, but we have a sort of, we do actually become emotionally or attached to an idea, and it's very difficult to let go of that, either through panic or through joy, I suppose.
Absolutely.
In trading. So with Tesco and ASOS, I mean, they're both situations being beaten down to the ground. What are your magic boxes telling us?
Yeah, well, I mean, I'm very happy. I'll come to that, but I think you brought up Warren Buffett earlier, and I think I just want to complete this because it's important. So, what investors want is to feel safe with the herd, and ironically, the time when they feel the safest, by definition, when the herd is at its largest, will be the most dangerous. Okay, the herd instinct is clearly common to all humans and needs to be consciously suppressed in order to take contrarian positions. And there are some quotes from great investors throughout history who echo this. One of them is Warren Buffett, who famously said, "Be greedy when others are fearful," and Baron Rothschild, who said, "Buy when there's blood in the streets." So, I mean, I'll move down to our view on Tesco and ASOS. So with ASOS, excuse me, we had a buy signal at 17.48. This is a three month cycle that we're looking at, and we've got a target price of 28.53 on this stock. I believe, actually, interestingly, today ASOS took another hit, so you know that kind of concurs with the idea that there will inevitably be periods of anxiety prior to us being proven right. But we believe strongly that this stock will rise significantly over the next 3 months, and we're hoping with 28.53. In Tesco, we had a strong buy signal of this last week, and the signal was at 174.55. We've got a target price of 250 on Tesco, and I believe it's heading in the right direction already, actually.
That's right, yeah. Well, they're reporting very soon, so no, it looks. I mean, I think it's a sort of situation that you have technical signals coming in there. If you are technically minded, you feel sort of reassured that it's actually doesn't. It's a good time to buy the falling knife. But I suppose if you don't go by those parameters, you're a fundamental person like Warren Buffett. You're actually reducing your positions.
Yeah,
you're actually getting out now,
precisely
with the herd.
And we're saying that that's absolutely the wrong thing to do. We're always going to be contrarian.
Right, and just to finish off, in terms of if people like what they hear, they want to get involved in what is sort of a glamorous area. Let's say hedge funds has a sort of. What are they doing? Is it for everyone? What type of profile is the average investor in your area?
Yeah, so for the k1t investment strategy, we can only accept what are defined as professional investors. Minimum investment in our strategy would be $100,000. Although we'd be delighted to have investors, and they can monitor our performance on our website. That's k1tcapital.com, and we're always tweeting signals almost on a daily basis, so they can check out how we're doing.
Check out your homework before they dip their toe in.
Yeah.
Simon Wajcenberg, CEO of K1T Capital. Thanks for speaking with me today.
Thank you.